Czerniawski, who's Head of Emerging Technology Policy at Consumer Choice Centre. James, so nice of you to drop by. Thanks so much.
Thanks for having me.
Nice to see you in person. All right, let's just start with Broadcom because it's the big mover to the downside. In fact, I think it was a bit of a surprise. I mean, strong beat and guidance is just not strong enough for the folks out here. Obviously, we know it's the AI chip revenue that's the main narrative here. I mean, what, 100 billion? Just not enough. I mean, the street wanted more.
Yeah, I think it's a really hard spot to be right now, is that sometimes good is just not good enough right now. I think investors are very cognizant of the fact that there are other potential future opportunities here. And even though, again, Broadcom did really well, you know, they certainly put in over $22 billion of revenue. Looking forward, they projected over $29 billion. When you're looking at their chip sales, they grew year over year over 140%. But analysts were also a little disturbed by the fact that they were only projecting $16 billion in revenue in quarter three, which is, again, really good numbers. It's just not good enough, though, for what people are looking for.
But people are looking for, are you concerned by those numbers? Because, I mean, 200% year over year of AI semiconductor revenue, $16 billion, sounds fantastic. Is this about where the analysts are at? I mean, are they just a little bit ahead of their skis in terms of lofty expectations, or do you think they're right?
No, I think that they're a little bit ahead of their skis, if you will, because the reality is that I think that this space is still emerging. What they're doing, what Broadcom is doing, and when you're looking at their future prospects, they have long-term contracts with the major players. They're probably going to continue to develop those relationships and acquire more.
Right.
So I think that there's a lot of opportunity for Broadcom to go and build even further. It's just that, again, I think when they're looking at potential, let's say, future IPOs that are on the horizon, and they think that maybe all these companies might be overvalued right now because of just the sheer amount of concentration of money that's going into them, they're looking at those other opportunities and saying, maybe we pull out now and we keep our powder dry for those other IPOs that are coming down the pipe here, right?
Yeah, I mean, I know you're not a stock analyst per se, but I mean, do you think the move, I mean, down 15%, we're off the lows now, is justified? I mean, or do you think this was just the fact that it had run up so much, 40%, what, year to date going into this print, that maybe it's just a bit of profit taking on the news today?
Yeah, I think it's definitely more like the profit taking. As somebody who does have investing on my own side, like, I'm not necessarily worried about Broadcom in the long run of things. I think that they have a perfectly ample opportunity for good projections to go and basically recover and rebound and continue their positive growth here. Again, AI is a booming industry. There's a lot of really exciting things happening right now. Broadcom is going to be one of those players providing the chips for Google, for a lot of these frontier AI lab companies, right?
Yep.
So they're going to be just fine, I think.
Anything concern you about the fact that, obviously you said the TPUs, obviously it's the design partner here for Alphabet, the fact that it's tapping the equity market right now for an extra bit of cash?
No, I'm not surprised at all. Again, like, I think that this just goes and doubles down. I mean, we've seen this. I've come on and talked to before about how Meta's done similar kinds of significant capital investments into the data center front and investing in AI. All these companies are doing it because they think that that is their way of getting profitability when looking to the future. So Google doing it, no surprise. It's a leading player trying to go and do the aggressive move that is necessary to keep them on the front end of this race rather than the back end. I remember when the AI thing first kicked off, Google was kind of behind. They didn't really know how to go and integrate this technology into their services. Now they're starting to go and do that, and I think it's really helping to go and reap the rewards here, and that's why they're going to go and continue that investment. I think they see the horizon, and they want to go and leverage that opportunity while they have it.
Okay, let's switch to CrowdStrike. Not as a huge sell-off as we're seeing in Broadcom, but still down. It was a little bit of deja vu from Palo Alto. Was that just the case? It wasn't flawless or sexy enough for a name like that? Yeah,
I was going to say, when looking at the numbers for CrowdStrike, I think what I would say is that it was solid. It was respectable.
Yeah.
But again, respectable in this current economy, in this current market, is just not good enough. Investors are looking for, I think, much better opportunities than what CrowdStrike is doing. But again, there are a lot of positive signs to see out of CrowdStrike. They had annual recurring revenue grow over 20%. That's over $5 billion. So they're building out a consistent customer base. That's really good. I think, like, the big questions when I'm looking at CrowdStrike is that they still have lingering litigation out there as a result of their massive failure last year from the Falcon outage. I think that that's the big thing that I think, if you're an investor, might make you skittish on CrowdStrike. And again, I just think that when you're looking at all of it together, it's not sexy. It's okay. It's just a solid kind of performance from the company. it's got plenty of opportunities. Again, similar to Broadcom, they can go and continue to expand, because when we're looking at AI and how it's going to play into the cybersecurity realm, that's very real. That threat is there, and they're going to play a role in that. But I do think that they face, potential competition from, let's say, Anthropic, that has Mythos, that's going and looking at the cybersecurity vulnerabilities in different systems.
Are you genuinely worried about Mythos? Because it seemed to have pulled the rug from underneath a lot of these stocks earlier this year. We kind of recovered, but then we got another update earlier this week about an expansion into more countries. Because the thinking with Mythos is that, while it's so powerful, it's just so limited, as far as its scope. But if they are looking to expand, this could be troublesome for some of these names, you think?
Oh, absolutely, because again, it means that Anthropic will have a bigger footprint in that kind of arena, right? And that goes and cuts into potential opportunities for CrowdStrike. That being said, though, they still have some of the top when it comes to operating in this space. People are still going to be leveraging their products. Mythos is just going to be another emergent thing, and I think that as that continues to develop, because Mythos is just their origin point of that kind of a product line, I imagine Anthropic will go and develop that further for something more down the line. Again, we're looking at CrowdStrike. I think that they'll ultimately be fine. It's just that they're going to have more competition that I think will hopefully make them better in the scheme of things.
Okay, so in summary, CrowdStrike was maybe a case of it was just so boring for a name that had just had its best month ever, perhaps in May. I mean, it ran up, what, like 60%-ish in that month?
Yeah, you're absolutely right. It had a really good run up, and I think that when you're looking at the numbers, it was just like, given that kind of a run up that it had, people were like, well, this math just does not math for us. We need to go and probably reevaluate what our position is here, because something just does not make sense.
Interesting. So, given everything we've just said, and then you throw in TSMC's warning last night about, hey, look, we might not be able to meet all the capacity needs or the demands from the US hyperscalers, even if we continue to build out some of this manufacturing. Do you think there are some sort of chinks in the chain or the chinks in the chip armor starting to appear at all, or we shouldn't be worried about anything? Because it feels like CC Wei was kind of just saying what we all knew just out loud.
I mean, it's not a surprise, right? Again, the demand for the chips are so high that it's not a surprise that we're having shortages that are potentially going to come up. But that's why the United States has certainly been very intentional about trying to go and build up domestic capacity. Now, that, I think, is the single biggest threat to any of these companies, whether it's Broadcom, CrowdStrike, Anthropic, OpenAI, because the data centers that are housing these chips, the infrastructure, is facing all kinds of delays and all kinds of obstruction, whether it's from protests or others. And if those do not go to completion, it doesn't matter how many chips you have, because now they're going to be sitting on the racks collecting dust. And that, I think, is a bigger risk for all these companies. That's a multi-trillion-dollar risk that I don't think anybody's truly really appreciating right now.
Yeah, and particularly at a time when we're seeing so much capital flow into those bottlenecks. So we have to wait and see. James, always a pleasure. Thanks so much for dropping by, and good luck with your High Rocks race.
Thank you.
All right, James Czerniawski there, Head of Emerging Technology.